Well, I think the lens we're trying to take is always trying to separate, what do the long-term fundamentals tell us and how does that stack up against, the short-term picture? Is this the noise or is something fundamentally changing? And I think for us, it's still very, very much about where are we in the business cycle and the conversation, we just had about with you and Shri on the US dollar. Those are still two of the most important factors that are guiding a lot of the way we're thinking about investing. And for us, that's what leads us to still like equities, more so in the US, but it also gives a little bit of comfort when you look at parts of EM. We like Asia much more than the rest of EM, but the dollar is definitely something we need to keep a close eye on. I think that's the one which will matter much more so in the short term.
Yeah, speaking of the dollar direction, I do want to just bring in some comments here coming from Niall Ferguson, who's a senior fellow over at the Hoover Institute, talking to our colleagues in Europe overnight. Take a listen to what he had to say.
Look at the world economic situation. It is America first. America is driving the world economy. The Fed's the world's central bank. The dollar is still the world currency. And anybody who thought that it was going to be displaced by the euro, or for that matter, the Chinese renminbi, I think was smoking weed.
So some rather strong opinions there coming from Niall Ferguson. In fact, I'm not sure whether you would go that far, but ultimately, do you agree that the only way is higher for the greenback?
Well, for the directionally, maybe in the short term. I think I completely agree that the dollar in the US cycle is still what matters. That is why, for example, we're so focused on the Fed. And look, the drying up in dollar liquidity and what we're seeing the impact on EM, I think is a support of that message. But I think on the dollar, we've definitely become a little bit more range-bound in our views over the past month. Short term, we've always sort of stated that this could, of course, run a little bit further. We've seen a little bit of dollar strength, but it's looking a whole lot more range-bound now. And it comes down to the basics of, US interest rate hikes. A lot of that already in the price. I think a lot of focus on what's happening on the other side. And we're not seeing the ECB sort of tightening at the same pace as we expected a few months ago, but we are seeing a lot of EM central banks begin to respond.
And even despite these EM concerns, I understand that your second top equity pick is Asia ex-Japan after the US. I mean, are you not too concerned then about what's going on in this region as it is exposed to the EM, any contagion risks, and the trade fight?
No, it concerns absolutely. And I think that's where a good example of where we need to sort of stack up how some of the short-term risks stack up with the long-term fundamentals. Short-term, dollar liquidity, EM pain, when there's a sell-off, everything tends to sell off at the same time. We've seen that, cycle after cycle. I think what's important is when you look at the basic fundamentals, whether they're earnings for equities or you're looking at the pain points in the current sell-off, the external fundamentals, current account deficit, FX reserves, Asia does look a whole lot better. And I think that's why we have a little more confidence in Asia specifically in staying the course as opposed to, some other parts of EM where Turkey, for example, we've never been huge fans. It's always been a bit of a red flag.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.